everyone, Marv Eisen here from Timeless Dollar. Today is Monday, August 2nd, and I want to make this short video to further illustrate a point that I've made in my previous 3 videos, and that is relating to market gaps and that they very frequently close on the market open or thereabouts or shortly thereabouts, not always, but the idea of closing a gap is a trade that should be a basic trade for newbie and novice traders. And I want to illustrate this point. I've done it in my past 3 videos, and today, August 2nd, was no exception. Played it a little differently. Now, I'm going to go back here. I have a vertical line here. At 1600 hours, market closed on July 30th. That was Friday, July 30th. The market closed, and I'm going to delete this line. The market closed right here at 43.94, about 43.94, and I put this horizontal line to indicate the market closed at the previous day. And I'm going to go to the opening, just about the opening, 9:30 Eastern Time. Right here, the market opened at 41.11. 41.11. So I know 2 facts at this point. On the morning at 9:30 on August 2nd, I know that the market price is 44.11. I'm sorry, did I say 41.11? 44.11. And I know that the market's previous close on Friday, July 30th was 43.94. Okay, so there's a significant gap between 44.11 and 43.94. There's 18 points. And the question is, will the market close the gap, and will I play the trend and I spot the trend? Now, if I just blindly went and said, well, every market gap closes, I'm going to sell on the open, I could have done that, but it would have been foolish because the market is going to go wherever it's going to go, and I want to be able to reduce my risk as much as possible. And by the way, if you haven't taken my free course on risk reduction, please do so. Okay, so I have my horizontal line at 43.94 to indicate on my chart where the market closed on the previous Friday. Market opens at 44.11, and as the morning progresses, the market moves to, let's see, 11:20, almost 2 hours after the market opened. And look what happened since 9:30. The market vacillated from 44.13 down to 44.01, but swung back and forth, back and forth, back and forth. And then at 10:25, I noticed something that I want to call to your attention. I'm going to expand this graph. The market high was 44.14, and then the next high, and that occurred at 9:30, and the next high was at about 10:30 at 44.12. But notice the high at 10:30 didn't quite reach the high at 9:30. That indicated a weakness on the part of the market. I wasn't ready to execute a trade. I wasn't sure that the gap was going to close because, after all, the market has been vacillating up, down, but there was a weakness on the high. But notice that toward 11:30, the price started to break. And right about at that time, at 44.03, I thought, I think the gap is going to be closed. And I placed a trade, and I watched the market meet and even shoot past the previous market close. And it ultimately shot down to 43.87. But, I mean, my target was 43.94. The same issue, the same point that I made in my previous 3 videos was reinforced here today on August 2nd. So please, if you are a beginner trader, a novice, take my free trading course on risk reduction. And as far as these techniques on managing risk, on market symmetry, on gap closing, I can teach you all that in my regular course. But these are techniques that are basic techniques. They're profitable, they're low risk. You have to have patience, but they will be quite rewarding. So thanks for watching. This is Marv Eisen for Timeless Dollar. Safe trading, and I'll see you in my next video.